today to be talking to Batseta, and thank you very much to the team for inviting me. I think it's good to reflect, Nonkosi, on what I've been doing this weekend. I spent this weekend helping my son, Ulukanyo, who's 9 years old. He was preparing for his presentation on leadership, and we tried to argue a lot. And I've been told his presentation went very well, and I hope mine will also go well today. As mentioned on the introduction, I think we have about 4 questions that we want to get answers from. Hopefully, this discussion will help and clarify some of these questions that we need to think about as the industry, and then be able to see how can we be able to harvest alpha as SA managers. And these are very simple things, that we live in a changing world. And based on that principle, when it comes to investing globally or investing in general, what are the things that we have to think about as South Africans? And I think one of the things that we cannot avoid is we must think globally to remain relevant for our clients. And our clients being in the form of a retirement fund, the beneficiaries for those retirement funds, the asset owners and asset consultants. And the other thing that I'm hoping to highlight is that investing in the world and outperforming a global benchmark is not an easy task. It's not an easy task whether you're sitting in South Africa or you're sitting in London or you're sitting in Singapore. No matter where you're sitting in the world, outperforming a global benchmark is not an easy task. And then we'll elaborate another solution at our disposal, which is following a global systematic approach when it comes to investing. And then we'll try and narrow it down in terms of how relevant are these strategies for South Africans. And then we'll answer the one question that is very important to everyone, is can South African asset managers actually manage money offshore? And I think that's very important, and everyone in this room wants to know that. Hopefully by the end of the 30 minutes, we will have covered those, and then any questions are welcomed. But before we start with questions, I think it's worth to introduce myself and the company that I work for. I started working for OMIG in July last year, so I haven't been here for too long. So if anyone has tough questions, you just need to know that I just arrived. So all the tough questions, we can reserve them for my team who has been in the business for longer. But jokes aside, I think Mutual Investment Group is an organization that is very clear about why it exists and what it stands for. One of the things that stands out for me when it comes to OMIG, it is the relentless pursuit of investment excellence. And also, as stewards of other people's capital, the business knows, and it's part of the DNA, that we need to be responsible investors. And the other thing that is very important and close to the leadership of this business is developing talent and giving people opportunities that would enable them to realize their full potential when it comes to the investment space. We've been lucky enough to have gained client support. I mean, our clients, we've got almost 448 billion assets under management. That is through a number of clients that support us. And we have experience in managing even assets globally. We manage about 178 billion assets in the global space. And those are basically in global developed markets, global emerging markets, and some of the assets are in SA, and we also invest in the rest of Africa. But there's that focus that I spoke about, is that OMIG focuses on providing clients with long-term oriented core equity strategies that are broadly diversified. And we do this utilizing a systematic approach to investing our clients' money. You'll see here the number of capabilities that we have. I didn't want to show this slide, but my boss insisted that I show this slide because it's around that time of review periods and discussion, so I couldn't argue with her. So on the left-hand side, on the green side, we have 3 active strategies that we run on behalf of our clients, and we also have on the middle side, the blue color, it's our indexation capabilities, And then on the left-hand side, we have our multi-asset capabilities that we run. And we'll display how these portfolios have been able to extract returns for our clients. So back to the business of the day. Why is it necessary for us to think globally to remain relevant for our clients? The first reason is that today, a significant portion of our clients' assets can be invested offshore. In the past, it used to be 10% in 1996, and today we're sitting at 45% of the assets can be invested offshore. And that is a significant part of the savings pool for South Africa. So we cannot afford to be thinking locally and not broadening our thinking in terms of the global space. So that is the first argument that we cannot debate about. And the other thing is whether you have a domestic mandate that invests on the JSE, the reality is that majority of the revenues and the profits on the JSE companies is derived offshore. And that on its own tells you that if you are to think inwardly and you are to think in the South African space only, you will find it very difficult to outperform. A lot of the things in an investment space are changing, and they're changing quickly, and it is unfortunate that it also impacts our wealth and it impacts our ability to generate alpha for our clients. Why global equities specifically? If we look in the past decade, the biggest generator of real returns has been global equities. So we cannot ignore this asset class when it comes to building our portfolios. It remains the best performing asset class for the past decade, and it also a solution for our clients to meet their financial goals. And we will talk about how then does one navigate the investment space when it comes to investing in global equities. But with that being said, keeping in mind the changing world and keeping in mind investing offshore, it is not easy to invest in the world. And there are tough questions that our clients need to answer, and they need to answer those questions wearing a local hat, but also thinking about local needs. And I mean, I think from theoretically, these are the different questions that our clients are faced with when it comes to manager selections and when it comes to investment consideration. If you look at the manager selection options that are available for clients, is a client can decide to appoint an offshore-based asset manager. And they can also decide to appoint an SA manager that has an offshore-based team. And then thirdly, the client can decide to appoint an SA asset manager that has an offshore partner. And then the fourth part is that they can appoint an SA manager who has global skills and global capabilities. And all the four options that I've mentioned to you, they have benefits. And they also have their disadvantages. But my focus would be to highlight the importance of employing an SA manager that has global skills and capabilities. And this is a requirement for both investors and asset managers and also consultants around the world. And before I highlight the benefits of appointing an SA manager who has global skills and capabilities, let's look at the investment consideration that an average client is faced with. Firstly, a client can decide to invest, to follow a specialist approach or use multi-asset strategies. And they can decide to invest on global funds, or they can invest on regional funds. And if they do that, they'll get exposure in developed markets, emerging markets, or a combination of the two that will give you the world. And also, a client can then decide on their investment policy statements whether to use active funds or use passive funds, and they can even decide to use a combination of the two to get the best out of that combination. But the other part is fees, is management fees and cost. So it's what cost are you actually paying to get the assets offshore? And I think these are the considerations that the manager needs to, an asset allocator needs to have on their IPS. But we know South African clients have have also other local needs that they have. Things like transformation, things like the supply chain for the asset management industry. And these things are critical when it comes to how you efficiently service a client, or what value add does your manager add to you as a client. And in this instance, if you appoint an SA manager that has global skills and capabilities, firstly, you get an SA team that understands local and global in the context of a South African. Because these teams are born in South Africa, they stay here, they understand the challenges of the country, they understand what an average investor needs in the country. So that individual that's managing your money, who is in South Africa, understands clearly what are the needs of someone in Mkagezweni, in Mthatha. They understand the needs of someone in Ladysmith in KZN. They understand the needs of someone who sits in Mokopane, who really want to drive investment returns. They worried about transformation. They worried about the general feel in the industry for the company, for the country. And also these teams are on the ground and they can provide personalized client service to the client. You literally, as a client, you can walk in the finance building and see your portfolio manager that you want to see and discuss your investment portfolio, because our doors are open. You are in South Africa. You don't have to get a visa to go to come visit us for a DD. The other part, which is a very critical element that I think Old Mutual has mastered, is that this SA business must contribute in developing South African investment industries. How can one do this? You first employ and develop South African talent, because we are a people's business. The other thing, you deliver those added requirements from our clients' IPS, investment policy statements. What are those? These are issues like BEE, these are issues like ownership, and these are issues like support of black stock brokers. And I think if you look at Old Mutual and where they are today, we are 55% black-owned asset management firm. We've passed that stage of being a BEE level 1, because everyone is a BEE level 1. And then we look in the team and who are the owners of the business? What is the alignment of interest of our clients and that of the business? And at Old Mutual, because of the transformation benefit that we've done in building our team in the past, we're able to sit today and say, we're a 55% black-owned asset manager that has 12% owned by the people that are running the business, which is actually part of the freedom culture, that the people who live in the land, they must be able to own it. And the people that work the company have ownership in the company. And that means the alignment of our clients' needs and that of our people are aligned. And the other thing, it is the support of other industries within asset management, which is black stock brokers. I'm happy to tell you today that the Old Mutual Investment Group has about more than 40% of our commission and trades goes directly to support black stock brokers. And this is a number that we're passionate about, because we support investment industries in South Africa. But I don't know if asset manager number 1 will be able to do this. And I don't know if an asset manager in SA that has partnered with an offshore-based partner will be able to do this. Maybe you'll find a BEE level 1 asset manager that has an offshore-based team, but we have to talk about other aspects of ownership. We have to talk about support of other industries within the firm. I mean, within SA, and what are you doing? And what is your high impact transformation strategy? But let's park that, because we know that our clients want one thing, investment returns from us, and they want all these other things. And this is something that I've mentioned at the start, that the Old Mutual Investment Group really is relentless in pursuit of that investment excellence. Now, if you look at the global space, you will see here that this is a slice and dice of the MSCI All Country World Index. You can clearly see that there's so many options to invest in when it comes to offshore. And offshore investing offers SA clients access to regions and leading industries and corporate brands that are not available in SA. I mean, if you look at the JSE, I think we have about less than 120 stocks that are listed in the JSE, and we have delisting from now and then. But the global space offers you about 2,920 stocks to pick from. These are companies and growth stories that you can pick from. And you have a lot of diversity benefits when it comes to investing offshore. And if you look at the global world, South Africa is very small. But with that being said, it is not a very easy task to outperform a global equity benchmark. And it doesn't matter where you are. If you look at the report that was produced by S&P, this is a report where they looked at a percentage of active funds that are underperforming their assigned benchmark over 1 year, 3 year, and a 5-year holding period. If you focus there on US, you will see that 61% of active funds underperformed their allocated benchmark. And 80% over 3 years have underperformed their allocated benchmark. And 87% underperformed their allocated benchmark over the 5-year period. The picture is a little better, bit better in SA. 51% of the asset managers in SA underperformed, 54% underperformed over 3 years, and 50% over 5 years. But I think the key meaning that I would like, key takeaway from this slide is that beating a benchmark is not easy, no matter where you are. And we hear this argument about regional presence and that. It is true, but actually it is not that clear that you will outperform a benchmark because you've got a regional presence. And this study has proven to us that it's actually very difficult to outperform a benchmark. Then if it's that difficult, then why are we here? Why do we think Old Mutual can do it, or anyone else, or a South African asset manager can do it? I think we as the Old Mutual Investment Group, we decided to take this evidence-based approach when it comes to investing offshore. Our local strategies, they follow a fundamental approach. We do have others that follow an evidence-based approach. But when it comes to offshore, the first thing that we need to understand is that what drives investment returns. So if someone gives me 100 Rand today, and I take that 100 Rand and I invest it, and at the end of the year, I give them 110. Then they will say to me, oh, this manager gave us a 10% return. And before the 1970s, that was purely attributed to manager skill. So people would say that the manager has great skill and they've given me 10%. But after the 1970s, the capital asset pricing model came into play. I know a colleague of mine, Marvin Halgard at 91, he used to like this model. And what this model basically said is that a big part of the investment of that 10% that you get is actually derived from market beta, which is how is the instrument reacting, or how is the equity stock reacting to the market. And then the remainder is defined by the manager skill. So it's attributed to manager skill. And then it got smaller. And then in post the 1990s, Fama and French came into play, and they said, actually, there are company characteristics or factors that are related to future investment returns. And they've identified momentum, they've identified size, they've identified value, and then market beta. And that manager skill shrank a little bit. And then Norway and Megsis, after the 2000, came with another study and said, actually, there's returns that are linked to companies that, businesses that are managed very well, businesses that have got solid balance sheets, and they've got monopolistic or oligopoly presence in the industries they operate in. And they call these quality businesses. And then the quality factor was added into the studies. And that manager risk premium, it shrinked further. So then it was on this premise that we actually realized that exposure to factors is more relevant than manager skills in driving future returns. But you need to keep this in mind, that the market rewards factors and styles at different points. If you look at the rolling 12 months excess return over the APRI, is that some investment styles will outperform and some of them will be underperforming. Depending where you are and which style are you invested in, you will experience those long underperformance or those long outperformance. Then how do you then able to extract returns in this difficult market. So we believe that companies' characteristics and factors are actually related to future returns. And then if factors are driving share prices and they vary at all times, it is very important to have an investment process that adapts to these styles. And then there's other research that has been done in the market that talks about dynamic factors and being able to predict. So what we do, which is through this academic research and our own rigor analysis, we quantify the relationship between the company characteristics or factors and future returns, and in an objective, systematic way, and we construct portfolios. And the nice thing about this is that our portfolios are constructed in a way that risk management is embedded within the process. We'll demonstrate how is this the fact if we have time. So I think one thing is the approach that we follow. Why global systematic investment strategies we think works for South African investors. By nature, these strategies, they offer a broad diversity. And as I've said, what is the focus for OMIG? Our focus is to give our clients long-term core strategies that are sustainable and that offer excellent investment performance. And because these are evidence-based and the methodology that we take is driven by data and technology, we don't need the regional presence that is required. And also, these are scalable strategies that are fee competitive because you don't need a bigger team of 40 or bigger team of 75 or a bigger team of 178 investment professionals because you have a systematic approach that is able to extract returns. But the question remains, has these strategies been able to outperform their peers, the benchmark, and also being able to do that consistently? The numbers don't lie. This is the performance of the Global Managed Alpha Fund. We call it GMA. I used to have a fund that was GMA in my past life that I learned, but I actually think in South Africa, this GMA is the one that has consistently outperformed the benchmark, its global peers since inception, shorter periods, 5 years, 3 years, and most recently over 1 year. And it has been able to do so without the necessary regional presence that a lot of people are talking about. We've been able to do it in a systematic way. And that takes discipline. And that takes a methodology that is thoroughly tested over and over and over. And by the way, the global large cap equity peer group, these are not South African asset managers. These are global asset managers. These are asset managers that you see when you go to London, when you go to Singapore, when you go to the US. These are the managers that we've been able to outperform and beat our benchmark with this strategy. I don't think you can have a global equity discussion without talking about this magnificent seven. And one of the things that Lukanya was correcting me is how you pronounce magnificent. We tried, and I don't think I've got it right. The one thing about here, we all know the story that the so-called seven companies have actually were responsible for a large portion of the performance on the global space. But actually what happened here is these companies outperformed last year. Then they also became bigger on the benchmark. So they were forming part of the top 10 stocks on the RP. And what that meant for our strategy, because our strategy doesn't go around looking for specific stock ideas. It's looking for factors that we think are going to drive market returns. And what do we do then in terms of our budget? We tend to be underweight the ones that we're not, yes, we're convinced that they're going to outperform, but we don't believe that the factors of these companies are going to actually outperform the benchmark in the long term. So what we did, these companies were larger on the benchmark, we tend to be underweight them. And then we were overweight some ideas in the investor universe, and we were able to outperform the benchmark by being underweight 6 of these and only overweight 1 stock. And this is testament to the fact that our strategy is diversified, first of all, and also we also have proper risk management that is embedded in this portfolio. Because the one thing about risk management, if it's done within the strategy, it helps to avoid those unintended shocks, because risk management needs to be done before an idea makes it to the portfolio. Other than that, you will end up playing catch up. And our strategy is able to be strong enough that it can have those shock absorbers on risk management. But then how are we doing with other strategies? We've got the Old Mutual Islamic Equity. The only difference about this strategy and the Global Managed Alpha strategy is that this one follows a static approach to factors. And it's one of the performing and strong Islamic fund in the industry, also compared to global peers. And the one thing about this one, you can see these two gentlemen, these are not GQ model. This is Mahir and Fawaz. I'm sure Mahir is from Mitchell's Plain somewhere, and Fawaz is also from Cape Town. And they were competing and being measured against the best asset managers in the world, and they came up tops as the best global equity fund managers awarded by CTY. And we all know that these awards are competed globally. These guys are from the plain. If you ask them, they will know what is golden arrow. And they know and they understand what are the needs of South African asset managers, of South African clients. The other one is the World ESG strategy. We spoke about this. We said we have indexation strategies that are meant to be client specific. If you follow a passive approach, these strategies are low cost and is designed to offer investors opportunities to achieve an index benchmark like an ACWI or the World Index. But also the other thing, this strategy is highly concentrated on having companies that are scoring highly on ESG relative to their peers. And we also have an ESG emerging market strategy as well. But one of the things that I said is part of the DNA of Old Mutual is investing responsibly, because we are stewards on other people's capital. And it's clear that this strategy has proven over time, through its performance and strong performance over 1, 2, and 3, and 5 years, and since inception, that investing sustainably doesn't mean giving up on financial performance. I have 3 minutes left, and I only have a recap to do. I think, Xaba, you will forgive me. I'll just do a quick recap on what we spoke about. And also, one of the things that we have to do as South Africans, we have to think globally to remain relevant. Why? Because a significant portion of our assets can be invested offshore. And the second part is that the majority of revenues and profits on the JSE companies are derived offshore. And the other part is that global equities remains a key contributor to a key offshore asset class for our clients to meet their financial goals. But when we look at global equities, we said one thing that you need to be very careful of is that outperforming a global equity benchmark is not an easy task. And I'm sure you can ask any experienced portfolio manager, they will tell you it is not an easy. It is not an easy task. And I don't want to make this joke, but let me leave it. But also, in global equities, the approach that we've chosen as Old Mutual Investment Group is to clearly articulate what really drives investment returns. Is it manager skills or is it factors? But we can see that the exposure to factors and style done methodically with skill is more relevant than manager skill. And we did highlight to you that global systematic investment strategies work well for our SA investment. Why? Because of the diversification benefit, the consistency in performance, and the competitive fee. And also these strategies are highly scalable because they're not ran by big teams. You need a few people that will be able to do this thing in a tested way, and risk management is very important for our clients. And also, we've proven to you that the Old Mutual Investment Group has been able to deliver superior returns in our global equity portfolios over the past 10 years. And we're based in Pinelands, and we're not based offshore. We do have licenses and offices somewhere in the world, but our investment hub is based in Pilot. So I think we've answered this question. And I can attest to you now, you go to Claremont, one of our competitors will be able to demonstrate to you that they've been able to outperform the benchmark. You go to town, you'll meet some of them, they'll be able to tell you that they've been able to outperform the benchmark. I can tell you now in South Africa, we have world-class asset managers in South Africa that are able to extract returns for our clients. By the way, we have exposure to the same systems as the global asset managers. We have exposure to the same qualifications as global managers. And this is why we have the ability to deliver alpha in the global world for our client. And I can leave you with one note that we all need to understand. Back to what I was doing over the weekend with my son, Lukai, who's 9 years old. The unintended consequences of taking money offshore, you end up having a shrinking pot that remains in South Africa. And makes me think, as I was doing this presentation, what will it do to him, where he will work if he wants to work in asset management? Will he be able to talk to Batseta today when he's the same age as me at 47? Will he be able to come and present and use those presentation skills that he has learned on a Saturday with his father if all the assets are being moved offshore? I don't think so. But if they remain inside, we need to remember that South Africa is the best in the world. There's a lot of things that are not working, but there are a number of things that are working in our industry. I thank you.